It's about value investing and how you can actually use InvestorAi, of course, to identify those insights. But more importantly, even just understanding the concept around value investing. The chat is open. We're going to keep answering questions, but of course, take questions as well. We've all seen the sort of dance the markets have done, but I think Ravi will talk more about that. So over to you, Ravi, and we'll come back for questions. Over to you, Ravi.
Okay. Am I audible?
Yes, Ravi. Perfect.
Okay. Thanks, Shruti, and thanks everyone for joining. And as Shruti said, it's going to be a different style and template today. And it's going to start a little more academic than Akshay normally does. And the reason for getting academic is to reset all our thoughts from the fundamental principles. Okay. So I will spend a little more time explaining why value investing is different from the momentum strategies. And more importantly, I think all of you are familiar with me being one of the investors. So you would have seen me in chats being a part of all of you. And so I'm going to actually speak as an investor, what has happened, how we have learned, and what we need to do. And of course, I will also be explaining how InvestorAi can be used by all of us to actually focus on value investing as against momentum. Okay. So let me first use 2 or 3 slides, which is our standard slide, so that we remind ourselves of the expectation. Okay. So we're talking about value investing. I'm going to spend and explain why value investing is different from momentum beyond the theory, right? I mean, the theory would say that momentum investing is a lot more technical, value investing is a lot more fundamental centric. All of that is half true. So I'm going to explain.
Ravi, sorry, 1 second. We can't hear you, Ravi.
Can you hear me now?
Yeah. We can, Ravi. We can.
I don't know. Somebody unmuted me. Sorry, muted me. Okay.
Good.
Okay. So why are we doing all this? Okay. It is all going to be intellectually satisfying for us. It's going to help us. And Akshay keeps saying it's about time. So we are able to give time. So in fact, I think after I finish this, before I jump onto the presentation, maybe we should understand the profile of the audience. But and the 3 is investing is a process, ups and downs, right and wrong. And so it teaches us about risk management. It teaches us about how to react to the situations. And of course, we all can make money in this whole process. And time delivers money, tax efficiency delivers money, and all of that. This is the most favorite fundamentals that we emphasize upon, where we keep saying that each of us as investors, together with AI, with time, is going to be a winner and a winning combination. And it can't be more true than for value investing, and which is the reason why I'm going to talk a little more about how value investing has to be thought through by all of us. So when we talk about value investing as against momentum, what is expected in a value investing is you pick a company which is underpriced, undervalued, invest, hold on for a longer period of time and make money. This is what theory says, and this is what we would have heard. And what is longer term? It's all different for different people. For some of us, longer term can be a month. For some of us, longer term can be 20 years. But clearly 20 years, your money is going to grow more than it's going to grow in a month is all unknown. So in value investing, the expectation is not just you pick securities and companies which are undervalued. You're actually going to be investing in it for a longer period of time. And when that is the fundamental principle, what is very important for all of us is the amount of our own involvement in the selection of the stocks, holding it, understanding the businesses is a lot more involved than the Alpha 330 or any other, which is a shorter term. Because shorter term, the momentums could drive your own opportunities to make money. Whereas in the case of value investing, it's not as if you're going to pick all the value investing insights that InvestorAi throws. Because if it is going to be long term, and if you are going to invest in all the InvestorAi insights, you must already be rich. So the whole principle here is you're going to pick amongst the various insights that InvestorAi app throws up. So how do you pick? What do you do? And so I'm going to talk about 5 core things that we all need to remember when we do value investing. And when I walk through the app, I'll again reiterate that and remind all of us. First thing that is expected in value investing is you should know the company you're investing in. When I say you should know the company, you should know the company, you should know its balance sheet, you know its financial performance, you should know its capital structure. You should know a lot more than how the stock has been doing in the history and how it is going to do in the future. We will see that is why that information content, when we go and look at value investing in InvestorAi, is very different from what you will see in Alpha 330. I'll walk you through that. So you should know the company well, is one expectation when we are picking a security on which you are investing in. And if you don't know about the company, what do? You try to know about the company and then figure out whether it fits into your investment approach and go ahead and do it. That's principle number 1. Principle number 2 is know how the business is being managed. Who are the people behind the business? Are they new? Have they been in the industry with a track record? How is the capital structured? How are they funding the various projects? All of that. So you should know who the management is and how the management is. This is an expectation when you do value investing. When everyone talks about Warren Buffett and we say that how he's a value investing role model, but he's not a role model for no reason. He's a role model because he knows every company that he invests in. Third is you should know the competition as much as you know the business. And there is always a technical difference between competition and competitor. Competitor can be anyone. It doesn't have to be from that industry. It can be a larger than that. So competitor is a named entity. Competition can be someone outside of the industry. So what is happening to that particular product over a period of time, you need to understand it. So you should know about competition, and we'll talk about how we will know about it. And I mean, if you're familiar with the function called play, you will know how you will figure out how this company performs against the competition and things like that. And the fourth expectation on value investing is it is long term. At least 90 days is what we keep saying. Unlike the Alpha 330, where we talk about 30 days or shorter, and swing trades, where we talk about 3 days, value investing is 90 days. And as I keep saying, 90 days, is it short? Is it long? Nobody knows. But clearly, it is not a speculative opportunity. It is not a trading opportunity. It is an investment process. So it is very different. And one of the most important expectations because of that is do not react to the market. Have enough capital. Stay. If you are convinced about the team, convinced about the management, convinced about the company. You can ask me a question saying, if I need to know about the company, if I need to do it, why do I need InvestorAi? I will talk about that when I show the app on why do you need InvestorAi. And the last fundamental principle of value investing is, since you are going to be investing in fewer securities, you can't expect to be diversifying. So don't be too obsessed about diversification. It doesn't mean you will pick one company. You might still pick 4 or 5 or 6 companies depending on the capital that you have. But that still doesn't mean that you will diversify and spread yourself thin across multiple opportunities, which you can do in the case of swing. So there is no focus on diversification. So I'm going to repeat all of them. You should know your company well. You should know the management, how the business is being managed. You should know the competition. And you should not react to short-term fluctuations. It is bound to happen. And last but not the least is, don't focus too much on diversification, or don't think diversification is going to come to your rescue. With these 5 principles, I'm going to explain to you how the InvestorAi app needs to be used when you are going to do value investing. And I'm going to move on to the app in the next few seconds. So give me a time. While I'm doing that, do you want to pull up some of the questions? I want to know.
Actually, we got one, which is, you answered it, and Shailesh has also, which is, what is value investing? In fact, somebody just wanted to, I think, be very clear about theoretically what is value investing. And Shailesh has answered that one. Everyone, please keep your questions coming in. We would, as basic as it can be as well, if you've just started off, your journey in investing, very happy to help you. Can there.
You see the screen? I'm trying to. No, it's not.
No, Ravi.
It says screen broadcast.
Ravi, please stop sharing from the desktop so that can be.
Oh.
Yeah. He's right.
No, it stopped there. Let me try again.
No, Ravi, we can see your screen. So, as in we can see the PPT still. So you just have to stop sharing and share from the mobile.
Yeah, are you able to see it now?
No, Ravi, you need to stop sharing the PPT, which is still showing for us.
Ah, okay.
Yeah, now just share the mobile. Yeah.
Excellent.
Yeah, perfect. We can see.
Let's go to home. Okay, so I think you are all familiar with the screens. Of course, you would be now slowly getting familiar with the new look, new colors, and we'll talk about the purpose of the new colors and what it is intending to do in a separate conversation, not today. But if you look at this, okay, so we'll go into ideas. There are multiple ideas, and we are talking about short-term ideas, and we are talking about long-term investment. So clearly, what is value investing? Value investing is investing with a longer-term horizon than the short-term, which is either a swing or a Alpha 330. And if you go into value investing, which is what I'm going to do, and I'm expecting all of us to be familiar with selections and settings before we come here, but I'm going into value investing. Okay. So if you see, there are so many insights that are here, and all of you might be familiar that you can sort it based on whether a signal is active, inactive, and things like that. I'm going to keep it as latest because I'm going to pick one of them. And so this is how we have to look at the value investing. And I'm going to go through value investing for Tata Steel. I just picked that up because it came to the first tile for me. It was the most recent. And if you see this, Tata Steel has been picked up as a value investing insight. And it has been picked around 3rd of September. It's most recent, and that's exactly why that came up on the top. And this insight has been recommended by InvestorAi for all of us to look at it. And the first principle that I told you is you will get into this and make an investment if you have spent enough time to understand the business. What is Tata Steel up to, and how do they do? What is the group? What are they been doing? What is the competition? What is happening to the global economy? I mean, as you all know, I think global commodities are going up, and so steel as an industry is having a promising future. They did have a difficult time in the past. All of that is important for us to know. And let us assume that you know that level of background at this point of time. What you are expected to do is that purely from a recommendation that we are having, we are seeing that this is the relative value curve, and it's just telling us that the security is at the 14th percentile. And we have spoken in the earlier days about where they remain. This is taking the long-term history of the security and the various prices and where the prices are at this point of time. And clearly it is undervalued. But it is not just because it is undervalued, it is a value investing opportunity, because it is undervalued relative to its own performance over a period of time. And so that is where it is. And the price is about 1443 was the price as on last day. And what I would do is I want to first know a little more about Tata Steel. And if I'm going to invest in it, I'll go ahead and monitor it so that I know whatever is happening on it. The profit alert and the loss alerts are set at a default of 5% and 5%. What is very important for us to recognize when it comes to value investing is that you should have a view on Tata Steel and go into Tata Steel with a longer term in mind, which is, let us say, 90 days. So typically, I would set a larger loss alert than a typical Alpha 330 investment opportunity, not just because it is expected to deliver more returns, but it is because I believe in this company. Okay, so I've just set that alert and I'm just going back from there. And so it's going to appear in my tile on the homepage for as Tata Steel. And if I go further, okay, what are the other information that is available over here? Okay, it tells me how that particular company's capital structure is, and what is the consensus view, what is the valuation, and what is the future outlook. This is what I said when I said we need to know the management of the business. So you need to spend more time to understand the management of business. And in terms of capital structure, it says it is in the 20th percentile, which technically means it is a leveraged company. And so to that extent, it is fraught with risk. But at the same time, the consensus view is 91 percentile, which is on the higher end, and it is comparing it with the various competitors. And it's saying that you can actually do well because everyone believes this is a business that can do well. And it could be for multiple reasons. And what InvestorAi is doing is it is giving us all of these insights to us about the company in a single place. Otherwise, you need to go, and I'll also show live info, and you will go, you have to do your own research and understand a lot more. But it is giving it to us in a distilled manner. And in terms of valuation, it is undervalued, and that is why it is in the 84th percentile. And in terms of future outlook, it is 88th percentile because people expect it to be doing well. So in terms of historic performance, the company is expected to do well. In terms of consensus view, it is supposed to be doing well. So all of this works counter to a capital structure challenge, which is the reason possibly why it is an undervalued security. And that is how I read this particular pane on value investing from InvestorAi. And before I proceed further, I also go back into the bullseye on the top and see how the ALCO has been doing. And ALCO has been doing with 67 percentile, 67% success rate. which is a lot better in the current volatile market. And algo returns is about 5.4%. And that's what it says. And we need to keep looking at it as we go forward. But at the same time, when it comes to value investing, once you get into a security, your view is going to be a lot more about that security. Because as I told you, it is not about diversification. You're not going to pick all the value investing insights. You're going to pick a few. And the few that you pick, you need to understand it better. Let's go a little more. And you go further and you will talk about how has been the historic returns been. Last 3 months, they've delivered about 39%. Not too surprising because the markets have gone up. But there are also securities where the markets go up and the securities go down. So it's just an indicator for you. And in each of the 3 previous instances where this has been recorded, it has given positive returns. And that's essentially what we are seeing over here. And the previous recommendations were in August 2019 and February 2021, and the current one is now. So this is a summary view of what we can see about the security that I'm going to invest in. Is this good enough for me? Answer is no. Okay, I want to understand a little more. What do I do at this point of time? I can go either into the live info to find out if there is any news about the company. It's very important for us to look at the news. While the AI engine has looked at the news and given us the reason to recommend it, it is important as us, as value investors, need to go a little more and do a little more of a research. I normally go and look at a longer term story. And on a longer term, it has had a bull run. It has had a growth from almost twice its value, and nothing new about only this security. There are a lot of stable securities which have gone up over a period of time. But at the same time that there has been some correction, point number 1, that you see in the month of August. The second thing that you also see here is that it has been in an industry which went through a terrible poor phase, and then it has come out of it. That is steel and construction and all of this industry. So you need to impute your own knowledge and go through the various news items that are available before I decide to invest on it. I'm going back. What I will also do is I will also try to compare Tata Steel with other construction industry securities. So I will first select Tata Steel. Okay. If you are familiar with this way of looking, I like this a lot when I pick a security for value investing. And the reason is it gives a wholesome view of that particular security from multiple perspectives. Previously, I read only about consensus view and the capital structure and the valuation. Here, we are also looking at the drawdowns, and we are also looking at historic performance, not just a future outlook. And for the uninitiated, just the size of the picture determines how useful is it. But if you are a value investing candidate, please don't go only by the size. It's clearly a security where there is a capital structure deficiency, but that is more than offset by the valuation that you're seeing. And which technically means today it is an underpriced security for the business. And it has a good consensus view as well as it has had good historical performance. So when somebody asks a question, what is value investing? A company which is temporarily underpriced, which is expected to be well managed, and it has good opportunities to shine. That whole definition is getting proven when I look at just this chart. And let us say that I can compare it with some other steel, but let me compare it with some other stock. Let us take some cement, because that's also construction. Just I picked a cement. Okay, so I compare it with another construction stock, which is cement. And if you see there, what we are seeing is cement and steel performance have been closer to each other. And the reason they have been closer to each other is the fortunes are similar and things like that. But when it comes to a valuation, the cement company, which we are comparing it with, which is JK Lakshmi Cement, which is going to be considerably more overpriced than Tata Steel. So if I have to choose between the two, I would pick Tata Steel because it's a pure value investing opportunity. And consensus view has not been great for cement industry. If some of us have worked on the cement industry for some time, you will know that. And at the same time, in terms of drawdown, Tata Steel has had a more drawdown, which technically means it is more volatile, it is more risky. And I mean, people who are familiar with Tata Steel will know that that volatility is not short term, it is a longer term. Whenever there is economic downturn, Tata Steel faces a larger downturn. Otherwise, it makes it up in the normal course. So Tata Steel is a stable company, in my view, based on what I've seen, with good consensus view in terms of how to look at it from a future perspective. And the same thing is available in the form of a table and things like that. So this is typically
Ravi, there's one question on this itself. So yeah. Sunil Jain asks, Tata Steel has a score of 18 on valuations, and when you put it compare it with India, the score is 11, which is cheap. So he's asking, is this PE ratio?
Okay, look, most of these are not unidimensional parameter, and as Sarthak keeps telling, none of these statistics are based on a single metric at any point of time. But whenever you talk about valuation, PE is the biggest driver, but PE relative to the competitors or whatever competition that you have chosen. So from that perspective, it is PE, but it's not just PE as a metric.
Yeah, great. Let's move on, Ravi. Yeah, it helps.
Okay. So what I was saying is you need to know your company, know the management, know the business. And the emphasis of InvestorAi has been on making it easy for us. And as Akshay keeps saying, it is you plus AI. But if AI is not going to help me and AI is going to make decision-making difficult for me, it's going to be a problem. Here it is the other way. So the choice that I use is go to play, look at the company, look at the business and the market on a basis that we are able to pick a security easily, because I don't have the time, nor do I have resources to do a research about every insight that is being thrown up and make an investment. So since I'm going to pick a few, the way I pick is spend enough time to understand about the business. And this play helps me a lot to get a view and make a decision in an easy way. But at the same time, I also said two more things. Do not react on a short term and do not focus on diversification. So let us go back to the ideas tab. And I go back into value investing. So there are so many insights that you see that are available. And let us pick another one just for the sake of it. Take Sun TV. Okay. Sun TV is another insight, which is currently at the 15th percentile. And it started off with 18th. It has slipped. Okay. So for anyone who picked up Sun TV as a security based on the insight was published on 10th of August at 519. And it is almost a month. And it has lost. Okay. Even though it has lost, what is very important for us to recognize that when I got into Sun TV, whenever it was, maybe on 10th, maybe on 12th, or maybe on 16th, as the case may be, and it might actually show a loss. But look at that company, and if you go in and invest in this company, you would have invested in it saying, this is a staple. And especially if you're from South India, you would clearly know that Sun TV has such a dominant share, and it is almost a part of the lifestyle and habit. And the business is a stable business with good focus on the future. We also know that Sun TV is the same group which also made investments in aviation and things like that, but they got out in time, unlike many other investors. So you know that this is run by a management team. Keep your political views away. As a business management, Sun TV is a business which is known to be stable, known to be successful on a long term. And so you just get into it on 10th of August. Don't keep looking at it every day and look at exit. Keep looking at it to know whether there is a management change or whether there is a significant event that is going to impact your decision. But hold on, because by 10th of October, you should go with the track record of the algo, and you would know that you would have made it up. And so if you can't hold on to a security for 3 months, it's not a good value investment pick. And who decides whether you can pick that security or not? Your own research. So I picked one security where the insight was published and we have seen a drop. And of course, it actually saw a larger drawdown, and then it has moved up in the last about 2 weeks. So drawdowns shouldn't make you panic because you have done enough research on the company, is essentially what I'm trying to highlight when you jump onto value investing. Unlike an Alpha 330 or a swing where you expect to make the money in the next 2 days or the next 30 days, in the case of value investing, you should expect the security to move up or down, but you should have confidence in the business. And that confidence is not just because you feel that, oh, it's a famous name, it's a good name. No, that's not what we are saying. We are saying here that your confidence should be based on the data that you're seeing, based on the information. And that is where I leverage a lot more on the live info as well as the play, and go ahead and make that investment process or investment decision. Okay, so that's essentially what I had to say about value investing and how you use the app. So don't pick all of these insights, and we can pick one more and walk through it. We can pick something that has not done well, and we can still walk through it saying, would you have invested it? And as I told you, the example is Sun TV is the security that I picked, and I did make my own investment in Sun TV. But the reason why I continue to maintain it is because when I got in, I believed that it is a risk that I can take for 90 days, and it continues to be. And that's a fundamental expectation when we pick a value investing opportunity or a security and get into the market. Is there anything else that we...
Yeah, so Ravi, one more.
Yeah.
The question is, how do I know what the threshold value is? Is it that I can expect a certain percentage return, or like, in alpha, we talk about 3%, as a targeted return that you can look at. So I think the question here is, in the case of value, what is that, number that somebody should be looking for?
Yeah, I think that's a very, very interesting question. Okay. And let me try to answer it my way. Okay. So in the case of value investing, you are not chasing a return percentage. You are actually having a faith in the business. So if you don't have faith in that business, don't get in. And that faith is to come from the various metrics. And my approach typically has been, if you have faith in this business, if you have gotten, hold on till the 90 days. So there is no target. While when we talk about accuracy and things like that, we use 5% as a threshold, whether it has delivered 5% over 3 months, because that itself is 24% per annum. Keep the bull period away. Even otherwise, 24% per annum is a good return. And so you might still keep it. But the actual answer to it is, please hold on to the security for the 90 days, unless you have reason to believe that the premise on which you got in has changed. Like, let us say that you get into future retail, just taking a name, and you get into future retail and as a value investing, because it is retail is going to boom, blah, 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 you got in. But at the same time, in the middle of the period, you figure out that, hey, they're having a significant litigation and they're going to lose. Then you can change your view. Otherwise, don't change your view just because the returns are good or because the returns are bad. Hold on for 90 days is typically the philosophy that I follow.
Okay, Ravi, one more, because and based on your comparison of Tata Steel and JK Lakshmi. So what Ajay wants to know is, can you please highlight what conclusions have you made by comparing these two stocks in the play option?
Oh, I thought I spoke. Let me do that again.
I think it is about, yeah. So, he wants to know what the numbers, finally, what did they mean?
Yeah. Okay. Tata Steel and Fathom. Okay. There are 2 or 3 things that I did when I compared the two. First thing is, I compared JK Lakshmi as well as Tata Steel and figured out that they are comparable companies in the same industry, which is actually borne out by the historical performance. Okay, so they are comparable companies. And what I concluded is that in terms of valuation, okay, Tata Steel is undervalued. I know that Tata Steel is undervalued even without this competition. But once I keep the competition by the side, it tells me that it is indeed undervalued for similar performances. So the idea of using this spider chart is you can compare 2 factors at the same time. And I did compare valuation with historic performance. Then I went ahead and said consensus view is better, which is the reason why I will go with this security. And so between JK Cements, or for that matter, any other cement industry, security, and Tata Steel, and it doesn't have to be from the same industry. I picked the same industry or similar use cases because of the long-term economic impact that we have had because of COVID. So in a COVID sort of a scenario, whether we are getting out of COVID or whether we are getting into COVID, if I'm going to compare 2 securities of similar nature, I figured out that Tata Steel is a better opportunity. But as I keep saying, you can compare this with any other alternate option of investment that is available to you. And I'm going to now compare this with Sun TV. If I have to pick between Sun TV and this, let us see what I will do. Wow, this is very, very interesting. Okay. So if you see, Sun TV is a company which is not highly leveraged because it is a cash-rich business and it has enough cash. And so in terms of capital structure, the Sun TV is a very, very good company. So it's least risky purely from a perspective of the capital structure. And in terms of valuation, yeah, it is slightly overpriced, but related to Tata Steel. But Tata Steel is clearly a cheap stock, is essentially how I see it. And so from that perspective, between Sun TV and Tata Steel, while the Sun TV says from a capital structure, it is least risky and it is slightly more valued, between Tata Steel and Sun TV, I will pick Sun TV. And that's essentially how I use this chart. So if I have to have an opportunity between these two, I will make sure that I pick Sun TV. Though, as I told you, Sun TV has underperformed in the last 1 month and it has lost about 3% from the original value in August. So that is how you should use this. And that is how I use this. Shruti?
Yeah, so Ravi, actually last one on play, just stay there. Ravi, so Subhash's question is, can we compare it to JSW Steel? Because see, those are the two steel companies always in,
I know.
in talk. So I think, yeah, let's just.
Yeah,
And maybe,
JSW was also an inside Alpha 330 sometime, I think.
yeah, it was.
Okay. I'm not surprised that the two have had similar performances in the history. Okay. And which is why I said it is not an absolute number. It is not just the profit per share. Okay. So that's one. In terms of valuation, they are close to each other. But the consensus view for JSW Steel is poorer than Tata Steel. And it's also had a lower drawdown than Tata Steel. So one way of saying it is Tata Steel is slightly more risky. But at this point of time, purely from a future perspective, the consensus view is better. And so I think I would pick Tata Steel as against JSW Steel if both were an insight for me and if I have to pick one out of the two. Is that making sense?
Yeah.
Okay. So I find this as a single place holder helping me in choosing between securities. It is not helping me in allocation decisions, by the way. For an allocation decision, if I have to pick both the securities, how much will I put it in JSW Steel and how much will I put it in Tata Steel, is not going to be helped by this. And that is where portfolio construction comes in and a lot more of work and backtesting and all of that comes into play. But if I have to select between securities, this is the easiest way. Or I can use this to just compare it with an index and see whether it is better amongst the sector that I'm picking.
Okay. And Vignesh's last one on this is, what is that max drawdown in that graph? But I think he's just trying to.
No, I'll pick it up. I don't know. Max drawdown.
No, I think he just wanted to see the, between both of them, how to read it. I think that's his question. And after that, let's move to the next question. There are some philosophical ones as well. I want to take those.
I'll take that. Yeah. Okay. Now we are talking about play. We'll go back to Tata Steel. And
JS.
Yeah. Okay. So if you read specifically on the drawdowns, okay, the competing stock is better positioned on a score of 20 at 19 as against Tata Steel. And this is because all of us know that Tata Steel has had a significant drawdown in the last 2 years. Tata Steel did go through difficulties, whereas JSW didn't. Why JSW didn't is possibly because of the nature of steel that they deal with and the markets that they deliver to. Tata Steel is a lot more commodity-centric than JSW because JSW is focused on specialized steel. So this is all something that you should know by doing some amount of research. But clearly the drawdown for JSW is lower than Tata Steel because that is what it has been in history. So it is more risky. Tata Steel is more risky than JSW purely from a drawdown perspective.
Yeah, great, Ravi. Ravi, I'm just going to move last two questions of today. We've got a lot of questions, but I'm just going to go with this. Vivek asks, AI cannot have faith as a basis for platform investing. It is all about data. It has to have, so he says it has to have a metric target in mind. Would you not agree?
I totally agree on that. Totally agree on. AI cannot be left alone and it requires a target, but the target is not just returns. I'll tell you, this whole stuff, especially when you get into value investing, the target is not returns. Target is accuracy in the insights and its prediction. And so when it comes to value investing, it's very important for us to know how the algo has performed. But what is even more important than that is how has the insights played out for you? As I told you, diversification is not going to be possible in value investing where you're expected to invest for 90 days. So it's not diversification alone that is going to help you. It is about how your ability to pick a security and its returns is as important, unlike an Alpha 330. In Alpha 330, also you can't invest in all the securities, but you can invest in many of them because you're going to hold it for a period between 0 days and 30 days. Whereas in a value investing, you have to be selecting and picking. And that has been the emphasis of my discussions today. But at the same time, you need to look at historic returns. You need to look at historic returns, security by security, as well as the previous recommendations. So it's not something that you need to be looking at it. You need to look at how the historic recommendations have been, how it has performed, what has been the backtesting results. You can't just go with a single piece of information saying, I trust the mission. No, not at all. And we don't advocate that whole approach of I trust the mission as the only basis. And which is why I'm once again reminding all of us saying, we need to know about the company, we need to know about the management, and what AI can do it is make it easy for us to consume multiple data. Because we have so much of information, so much of noise that is available in the market. And so it is very important for us to pick a particular security based on meaningful information. And if I have to evaluate how InvestorAi is performing is, as an investor, I would look at it as how meaningful has the insights been, rather than what has been the success amongst all the value investing insights that it has delivered.
Okay.
Back to you, Shruti.
Yeah, last question for the day before we talk about, we have a special offer on even the monthly plan. So just hang in and we'll tell you about that. Last question, Ravi, is how much does the back test really influence the forecast of value investing?
Okay. Can Shailesh talk about it?
Yeah, Shailesh?
Yeah.
Do you want to take that, Shailesh?
Yes. So for a particular security to become a value investing insight, there are 3 minimum rules that we follow. The first thing, it should be below 20th percentile, which essentially means it is cheaper than it was historically. Second one is the multi-factor rank should be above 40. Now, what does that mean is when it's compared with other competitors, it does relatively well, or at least better than almost half the companies out there. Now, the third biggest one is back testing, which basically sees the last 2 years. If the stock was undervalued, has it actually bounced back? Now, one particular example I want to talk about why bouncing back from cheap is important is in value investing, most people would say, hey, the stock is cheap, let me put money in it. But for us, it actually needs to bounce back from the lows, or else maybe it is not so undervalued. For example, let me just take an example in the mind, maybe ITC, right? Everyone thinks it's undervalued. I also think it's undervalued personally. However, if you look at, if we do a back testing today, right now, and you will see that it is not bouncing back from that level at all. Though it is at 17p and the entire industry is at 30, 40p, it's almost 50% cheaper than anyone else out there. Still, it's not bouncing back. And that's why backtesting is a very important metric. You can click on the third tile of each insight and see how instances would have performed during historical times when the security had gone below 20th percentile.
Great. Thanks, Shailesh. Prabs, if you can just get the slide up. So everyone who's here, I see a lot of new people who have come in. We're InvestorAi. We're available on the Play Store and App Store. There is a 15-day free trial. As soon as you come in, you will actually see that there is a button for you to start your free trial. So please, use that. There are a number of messaging that will tell you how to use the app, and then you also have a discount at the end of your free trial period to actually subscribe to us. Now, for those of you who have already been using us for a while, while these are our the subscription plans that you just saw on the screen, please note, this is the coupon code you can use, and you will be able to win a gift voucher for each of the plans that you pick up, whether it's monthly, quarterly, or annually. So thank you so much. And you can, of course, see us on any of the social, we're on all the social, handles, on Facebook, on Instagram. These are our handles, and hope to see you next week. We will talk more about, a lot of these questions, and thank you very much for joining us today.